Good morning, everybody. It's Thursday, December 14th, 5:28 a.m. Central Time. Mixed trade in the grain markets this morning. Pretty quiet. March corn futures up 2.25 at 481 3/4. March soybeans down 1 at 1325 1/4. March Chicago wheat up 5.5 at 610 3/4. March Kansas City wheat up 3.25 at 635 1/4. March spring wheat up 7.5 at 721. The Fed was without a doubt the biggest news in financial markets yesterday.
Most definitely. So the Fed kept rates unchanged and penciled in at least 3 rate cuts this next year. The cuts are expected to total 0.75%, which is lower than market expectations, but more aggressive than what officials previously stated. The markets, however, are anticipating rates will be reduced by 1.5% next year. Following the announcement, the Dow Jones gained 1.4%, surpassing 37,000 for the first time. The S&P 500 and the Nasdaq also increased 1.4%.
So make no mistake, the rate was left unchanged, but the language and the attitudes are everything. People really read between the lines here. The word of the day yesterday was any. They inserted this one word into their language, the word any. And this is what Powell said about it. We added any as an acknowledgement that we are likely at or near peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we were thinking. And the word any was inserted here in determining the extent of any additional policy firming. So Powell, I think, even hinted at the idea of cuts at the end and hinted that they could cut before inflation hits their target, which really got the markets excited. So you saw interest rates drop. Your 2-year, this is just one example. They all dropped, but the 2-year dropped sharply. This thing is almost a full percentage point off of where it peaked in October. The yield on the 2-year Treasury peaked almost at 5.3, and we're down to almost 4.3 this morning. So that's a big move in itself. When you look at the dot plot, the dot plot is put together by Bloomberg, but this is essentially what Fed members believe will happen in regard to rates. So by the end of 2024, the average Fed member believes that the Fed fund rate will be 4.6%. The current target range is 5.25 to 5.5. By the end of 2025, they're talking like 3.6. By the end of 2026, they're talking sub 3, and then we're talking like 2.5 longer term, which would be the end of 2027 or later. So this is not something that's going to happen overnight. But I'll tell you what, if you look at the CME Fed tool, they're talking now a 19% chance of a cut in January. By March, it's almost a certainty, 89% chance of a cut by March. And following the May meeting, there's an 87% chance that they cut, and not only cut, but cut a 0.5 point to a 3/4 point cut from current levels. So it's really phenomenal what's happened here. The stock market loved this. The S&P rallied sharply yesterday. Best close of the year. We're now only 2.4% from all-time highs in the S&P, up 22.6% year to date. And the Dow Jones posted fresh all-time highs yesterday, 37,000. We've never seen that before. And there it is. As it relates to a lot of you guys, higher interest rates have been a thorn in your side when it comes to your farming business or livestock business, whatever it is. And I think you're going to see some relief, and it's going to start sooner than you think. If you look at like mortgage rates, they've already started to come down, and they did so more yesterday. So this isn't going to impact, I don't think, your grain or livestock markets. I don't think this changes the corn price, but the reduced borrowing costs will absolutely be a big positive for a lot of you guys. So I think this is all good news.
The November PPI was reported yesterday and revealed that the economy is still cooling. Wholesale prices in November were unchanged on the month, which was up from a 0.4% decline in October. On an annual basis, prices increased by 0.9%, down from 1.2% in October and lower than the projected 1%. Energy prices sank 1.2% last month, while food prices rose 0.6%. The report fueled optimism that inflation will continue to decline and that the Fed will be able to start cutting rates here this next year.
Yep, this was out before the Fed, of course, and it basically is more additional support for what we were told yesterday, and that's it. That rate cuts are coming. It supports all that.
So if you guys have not checked out our premium content, you need to do so. Joe, can you tell me about the video you put together yesterday with Brian Split?
What the hell is a head and shoulders pattern? You'll hear people go on TV or the radio and say, well, I'm eyeing this possible head and shoulders top on this chart or head and shoulders bottom on this chart. I think we put together the best explanation of it that I've ever seen in yesterday's video, and Brian did a really nice job with this. Also, we talked about fuel needs. I've had a lot of calls and texts from farmers about fuel needs, which are not, it's not necessarily the biggest line item out there for most of you guys, but it does matter, and costs have come down. Is it time to lock it up? We gave Brian gave his thoughts on the fuel markets from a technical standpoint. Is this something that you guys should take a look at? If you want to see the premium stuff, go to standardgrain.com, sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. It takes like 1 minute to sign up, guys. This is the best way to support what we're doing here. The podcast pays us nothing. YouTube pays us enough to keep the lights on. This is what allows us to get up and do the podcast and do YouTube every day. So check out the premium sub. And I think you'll really, if you guys like this, you'll love the premium sub, I promise.
Most Brazilian soybean areas will remain dry for another 5 to 6 days. The drying will be a positive for production in southern areas that have been too wet, but a negative for central and northern areas. Rain is slated to return next week. Coverage will be spotty, while amounts will be highly variable. Rainfall continues to run well below normal seasonal levels down in Brazil.
Lots of debate about this. So if you look at the soybean market, and it's just we've been sideways in a fairly wide range. It's been like $1 range, but it's not trading like a drought market. I don't think personally. So I think the market believes, if I had to guess what most traders are thinking, they're thinking that the crop's not going to be, it's not going to live up to its full potential by any means because of these dry conditions. But at the same time, it's not a disaster, and they can probably put out a damn big crop with less than normal rainfall. The extended GFS this morning, which is hardly reliable, your 10 to 15 day stuff looks quite a bit wetter. And if that's realized, then maybe that's bearish. But I don't know. There's a couple different ways to read this. We put out some big crops with dry conditions in the U.S. This past year. I know that it's a different environment down there, but the market's not acting like it's as bad as some people would suggest, I guess.
Argentina's new president, Javier Milei, plans to increase export taxes on certain grains to 15%. The proposal would not impact tariffs on soy. Soybean exports are currently taxed at 33%, while wheat and corn exports are taxed at 12%. The news comes one day after Argentina's economic minister announced a 50% devaluation of the country's currency, along with other major spending cuts. Argentina ranks third in the world for corn exports and is one of the top global exporters of soybean oil and meal.
So some people say that all this Argentina stuff is bullish. Some people say it's bearish. My thought, as I told you guys yesterday, is that it does not add or subtract bushels from the balance sheets right now, and probably not in the next year either. So I don't know. I don't think this is like a trend changing event. I mean, it's a story. And if they do see a big economic recovery, I think it'll result in more production. For now, some people think that there's going to be more inflation, which could mean farmers hold on to soybeans, what soybeans they have left after half a harvest last year. But I don't know. I don't think this is like a make or break deal, kind of the same as I thought yesterday.
U.S. ethanol production declined last week. Weekly output of 1.07 million barrels declined slightly on the week and compared to the same week last year. Ethanol stocks were pegged at 22.1 million barrels. The print increased 3.1% compared to the previous week, but declined 5% compared to the same week last year. Implied gasoline demand was up 4.6% compared to the previous week and 6% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up marginally versus the same period last year.
Ethanol production is a demand bright spot. We could use some more demand bright spots. Ethanol production for the current marketing year is 3.9% ahead of last year's pace. USDA is projecting an increase of only 2.9%. So it's going in the right direction. Production is up. Stocks are down. Ethanol prices have come down. We had this chart last week, and we're going to show it to you again today because prices have come down even further. That being said, even with the price of ethanol moving lower, along with the broader energy complex, the margins are still good enough. I mean, they're break even to like in some of the better areas, maybe 80, 90 cents per gallon positive, depending on the plant. So the ethanol situation is still a positive demand input, I believe.
We had another flash sale of soybeans on Wednesday. U.S. exporters sold 125,000 metric tons of soybeans to unknown destinations for delivery during the current marketing year. As of last Thursday, the U.S. soybean export book was running 16% below the same period last year.
We're going to see some good. We should see some good looking export sales numbers reported at 7:30 this morning. Corn sales should be 800 to 1.6, soybeans 900 to 1.8. Wheat sales should be excellent, 1.2 to 1.6, and that's because a lot of those flash sales that were reported over the last 7 days are going to be included in that weekly report. What did cattle do yesterday?
They pulled back a bit. Feeder cattle futures closed an average of $1.46 lower. Live cattle futures closed an average of 89 cents lower. Box beef was mixed yesterday. Choice ended the day at 291.64. That was down $1.14. Select ended the day at 259.21. That was up 55 cents.
Outside markets, the U.S. dollar's off again. Stocks are up again. Bonds are up again. Gold's up $50 this morning for you gold bugs out there. Silver is also up sharply. Crude oil is up $1.17 at 70.64 in the January WTI. Have a great day, guys. We'll talk to you on Friday.